JJ the CPA here. Let's talk about this unprecedented Paychex Protection Program loan as it relates to having it forgiven. So watch my other videos on how you get this loan and how you determine how much you're able to borrow. But the thing to note is the qualifications and the factors and the calculation of how to get the loan, how to arrive at the amount of loan. Once you have that loan, okay, the things that we're getting ready to talk about have nothing to do with what you used for the information to get the loan. Know this, when you get those loan proceeds, if you use it for payroll taxes, doing the employer retirement match, paying for employees' health insurance, rent, utilities, and then in the name business loans, mortgages in the business name that's getting this loan. If you use those loan proceeds for those amounts, those would be qualified expenses. To the extent that you used your loan proceeds for those qualified expenses, the loan is not paid back. You borrow $75,000 and you have $108,000, and I have an example in another video. If you have $108,000 in these qualified expenses, payroll taxes, employer paid health insurance, employer paid retirement match, the interest, rent, utilities, if you had $108,000 in those expenses and you borrowed $75,000, none of that $75,000 loan would be repaid under this CARES Act Paycheck Protection Program loan. This is completely different from the SBA. You get this at the bank. You get an SBA from the SBA on the website. There's no such thing as a forgivable SBA loan. No such thing. It is this triple P under the CARES Act that is forgivable. Now, a couple of questions I had from clients that I'll throw in here is that when they say rent, they mean rent. They don't mean CAM. They don't mean repairs and flowers and paying the person to do landscaping. When they talk about rent, it is what was in place February 15th of 2020, meaning what were your rent obligations, okay? That is then what you get to include. You don't get to prepay rent, or if you rent from yourself, you don't get to increase the rent. Utilities. So when you're talking about the utilities, it's not just gas and water and electric, okay? Now, you can't go too far out the bounds here, but when you're talking about utilities, it would be the things that are directly related to running that business. When you're talking about the loans, it has to be in the business name. So if you have an entity that owns real estate and you have another entity that you're running your business out of, and they are two separate entities, it doesn't matter that your mortgage that you have in the entity that you own is then the building that is housing your business. They're two separate entities, so that mortgage interest would not count, but the rent would. Follow me. You are renting from yourself. Well, the rent that you're paying to your other business, well, that counts as a qualified expense, and it has to be to the extent of what you've already been doing. You can't just all of a sudden double your rent. So that's why if the mortgage or the loan is not in the business name that's getting the loan, you're not going to be able to use that interest as a qualified expense. So qualified expenses are in the 8-week period after the loan proceeds are received. So you have 8 weeks to spend that on the qualified expenses. Okay, can't do bonuses, you can't pay out, do a big increase on what everybody's paying so you don't have to pay it back. That's not the spirit of what this is. This is a situation to take care of the necessities. So when you're looking at your qualified expenses and during the 8 weeks, that is where you will need to be keeping documentation, because that's where you will need to be able to prove to the government that you used the proceeds of this loan, the triple P loan that came out of the CARES Act, this forgivable loan, that you use the proceeds on qualified expenses. So it won't be a P&L or something from QuickBooks or an Excel spreadsheet or taking your word for it. It's going to be you showing and proving, I got $75,000. Here's what I spent on these expenses. Therefore, none of it is to be paid back. It's all forgiven. I'll talk in an email, in a video here in a minute about the taxation aspect of this when you get the loan and when it's forgiven. But know this, it's going to be easy and to get this loan up front. But on the back side, if you can't show that you used the loan proceeds for what it was meant for, then you're going to need to pay it back. There'll be interest charged on that. Okay, so we'll get into those provisions in another video. But know this, you spend the proceeds from a PPP loan on qualified expenses in that 8-week period after getting your loan, you don't have to pay back that amount, which is unprecedented and is an absolute huge, huge relief. All right, hey, thanks for listening. I'd love it if you'd subscribe to my YouTube channel. Check me out on all social media, #JJ the CPA. All right, hey, thanks for listening. And then don't you ever forget, you've never met a CPA quite like me.